Pitching know how to appeal to investors. 1. Why is IR pitching important? The term pitching is very familiar if you're in the startup industry. IR stands for Investor Relations, referring to public relations aimed at investors. And pitching means presenting your idea and business plan. Just as a baseball pitcher throws the ball with all their might, pitching is more than just talking. It's about quickly and clearly conveying your item. Typically, IR pitches are short, ranging from 5 to 10 minutes. Within this brief period, you need to cover a lot of ground. What problem your startup identified and how you solved it, how your business model is structured, and much more. Since opportunities are limited, it's crucial to make the most of every IR pitching chance. By focusing on the core message, because it's such a critical matter, pitching must be conceived with utmost focus and concentration. 2. Core principles for captivating investors. So, how can you pitch effectively to appeal to investors? There are a few core principles to remember. 2.1. Think from the investor's perspective. First and foremost, why should investors listen to you? They are there to decide whether or not to invest in your business. Therefore, you need to clearly show them, from their perspective, why this business is attractive and what kind of returns it can bring. You must research basic information such as what funds the investor manages, what startups they have invested in the past, and which investments were successful. Understanding the investor's tendencies, what companies they've invested in, what types of founders they prefer, and what aspects they focus on during investment reviews can be very effective in successfully leading investment negotiations. They will be curious about how your business will contribute to their investment portfolio. 2.2. Deliver clear and concise messages. Pitching requires conveying a lot of information in a short time. That's why it's crucial to extract only the core points and deliver them clearly. Long, rambling sentences can exhaust the listener. For example, a sentence like, "It's very hot these days, so in summer, clothes worn once are usually not worn again." And many people find it cumbersome to repeatedly drop off and pick up clothes from the dry cleaner. So we thought, how great would it be if we could easily send clothes for laundry through an app? And that's why we started OOO. A pickup laundry service can feel too long and stifling. Developing the habit of breaking sentences into shorter ones helps avoid grammatical errors and makes it much easier for the listener to understand. Short, clear sentences also boost the speaker's confidence and demonstrate conviction in their message. It's very hot these days, isn't it? In summer, like this, clothes worn once are usually not worn again. Everyone finds it troublesome to constantly drop off and pick up clothes from the dry cleaner. So we thought, how great would it be if we could easily send clothes for laundry through an app? Introducing OOO, your pickup laundry service. This approach, stating the core point first and then adding explanations, is much more effective. The main point must always come first. 2.3. Identify problems and propose unique solutions. The best way to capture an investor's attention is for the founder to explain market problems with a unique perspective and insight. If you analyze and explain the market from a different angle than other founders, you can attract investor interest. Then, you need to explain why your team is best suited to succeed in that market. It's not just about boasting about your qualifications or connections, but about explaining why you became interested in this problem, how long you've obsessively focused on it, and how much passion you have for solving it. Investors want to see your sincerity and your commitment to problem solving. 2.4. Solid business model and financial plan. Ultimately, investors expect returns when they invest, right? So, it's crucial to clearly show how your business will generate revenue. You need to present specific details like the price of each product or service, the fee structure, and how they align with your revenue goals. For example, selling X units of product will achieve Y in revenue. Investment return predictions should also include amounts and estimated timelines. This part can be a decisive stage in many investments, so you must prepare it carefully to avoid inconsistencies. Sharp investors will ask many questions in this area. It's important to explain how reasonable your financial plan is. 2.5. Market potential and growth prospects. Investors do not support projects without demand from the target audience. In this slide, you need to clearly state how your new business will attract the market, who your potential customers are, and what the market size is. You also need to present a vision for how you will grow in the future. Showing the market size and growth potential will be an attractive factor for investors. 2.6. Strong team capabilities. No matter how good an idea is, it's meaningless without a team to execute it. You need to introduce the capabilities of the founder and key members, and convincingly demonstrate why this team can make this business successful. This means highlighting the team's expertise, experience, and problem-solving abilities. The team's synergy and passion can build trust with investors. 3. Preparation and attitude for real-world pitching. Now that you know the core principles, let's talk about preparation and attitude for real-world pitching. 3.1. Practice, practice, practice. Pitching is ultimately the result of practice. You need to practice countless times until you can speak naturally, as if there's no script. Practice with a timer and try doing it like a real pitch in front of friends or colleagues. Get feedback and keep refining it. Rather than memorizing perfectly, it's important to repeatedly practice until you can naturally articulate the core content. 3.2. Prepare for Q&A. There will always be a Q&A session after the pitch. It's a good idea to create a list of anticipated questions and prepare answers in advance. Especially be ready for questions about your business's weaknesses or shortcomings. It's wise to honestly acknowledge them and present a plan for how you will improve. Even if an unfamiliar question comes up, don't panic. It's important to respond calmly. Perhaps by saying, "I will confirm and get back to you." 3.3. Confident demeanor. A confident demeanor builds trust with investors. Non-verbal elements like voice tone, eye contact, and gestures also significantly impact the success of your pitch. Don't be too nervous. Focus on showing your passion. When your passion is conveyed to investors, they will show greater interest in your business. 3.4. Clear call to action. At the end of your pitch, you must clearly state what you want. This means explaining specifically how much investment is needed for this round and what it will be used for. Vague requests can confuse investors. You need to clearly present the investment amount and your plan for how those funds will be utilized. 4. Conclusion mindset for a successful pitch. Ultimately, pitching to appeal to investors is the skill of effectively conveying your ideas, passion, and ability to turn them into reality within a short time. By clarifying your core message, thinking from the investor's perspective, and incorporating a sincere story, you will surely achieve good results.